Yo, what is good, everybody? I hope you all had a fantastic weekend. Enjoyed the Super Bowl, whatever you guys did. Today was a slow day overall for the markets. Really just traders waiting on CPI data coming out tomorrow, so that's what we're going to be taking a look at. Really, what the outcome can be from that news that comes out tomorrow morning. So, with all that being said, we're just going to get into it. Make sure to show the video some love, give it a like and subscribe, and let's get into it. So, to start off, we're going to be looking at oil here. So, oil, it's been trading in this range for kind of a while now, actually. Very interesting. It hasn't been in a range like this for quite some time, so we're, we're really going to be looking at a big breakout soon. A considerable move that would last, I would say maybe over a week straight. So one way to just kind of notice this, I actually haven't even looked at this, but because we've been consolidating for so long, I know this is going to be relevant. So when something's consolidating for this long, you'll see these yellow lines, which is um, this is the Bollinger Bands, and this is the Keltner Channel. And when the Bollinger Bands start to get inside of the Keltner Channel, that volatility is really tightening up, and that's kind of signaling or pointing to when this consolidation phase can end. The tighter it is, the sooner it's going to break out, basically. So um, it's been consolidating for quite a while now, um, and it's getting primed for a massive breakout. If oil can get above 83 to 84, this rectangle right here, I can easily see a straight shot. Just um, it can really run, and same thing for the downside. We'd be looking at that 62 level. Under that, probably going to be this range just based on demand zones for where I would think buyers would be stepping in. So keep an eye on oil. It's getting primed for a breakout here. A lot of money to be made. We played that straddle on SPY. Go back a few weeks, I believe. Um, you can make money whichever way it goes. So keep an eye on this thing. This is really going to be that middle ground right here where it is, kind of in the middle of this range. So whichever way it goes, you would make money on either side. Natural gas. So we were talking about that Hurst theory, Hurst cycle analysis, where the bottoming, it was expected to bottom anywhere from January 30th to February 9th, and that's what we got. This is the first time it's actually bottomed, kind of, or at least just hasn't continued gapping down like 10% every day. So it's quite interesting to see. You bottomed at that 100% extension of this wave this wave up here. So really interesting spot. Bulls need to break this trend line here. If it can get over this, I can see just pretty much a straight moonshot, and finally have some considerable consistent upside. But until then, it's at risk of breaking lower, unfortunately, which is just kind of baffling at this point. But we'll have to see. This trend line, that's the line to break. So keep an eye on that one. And of course, just those previous lows here. But it could also be a fake out if it makes a new lows, like there's something like this. Um, Traps a lot of bears, stops out a lot of bulls, and then rockets up. So really interesting spot here. Just keep an eye on that trend line. DXY. So, if you've been following the videos, we've been bullish on this pattern here. We did this crazy trap here. Just trapped a lot of people. But, regardless, reversed back up, shot above this really difficult supply zone, and it did it pretty easily. Came back and tested it, actually, so you can see that. Just kind of that top region. So now it's just kind of a question of, I guess, can it hold this region still? So nothing's really changed. Keep an eye on this zone right here. So that's going to be around 102.60 to 102.2. And even then, this is a lot of congestion, so it would be interesting to see this just kind of go straight through all of this, because this whole region's somewhat of a support, so it's not going to be very easy to break through all this, but we'll see. And I've been talking about, there's a lot of liquidity we can test up here at around 105, the low mid 105. So keep an eye on DXY. I would be leaning maybe to upside, but hard to say. CPI, that's the big thing to be looking out for. I'm going to explain it when we get to SPY. Whichever way it goes, you don't need to bet. you don't need to bet on the initial move. I'm not sure why people always do that. It's, you know, maybe you get lucky, maybe you make a couple 100% on call options or whatever, but in the long run, that's just not a sustainable way to make money in the market. So the way I'm looking at this is I'm going to play the aftermath, and I'm going to explain that when we get to spots. So Apple here, very interesting spot. It's been on a massive tear here, and here I've been kind of saying it's an interesting spot because there's a lot of incentive to fill this gap, which it's very likely to fill that gap. It's not that far away. This is that's only $10, so it's not far at all. And we've been talking about how there's a lot of gaps. There's some gaps. I was thinking of Amazon. Amazon has a lot of gaps to the downside. Apple only really has one main one, but it can't stay up here too much longer. If it's just gonna drift up here, and you can see it's respecting these fib channel lines. These are the boundaries of that fib channel. As you can see, if you want to draw that out, just kind of lined it up with this one, this one, this one, and this thing has really been the holy grail of descending supports and resistances. So put this on the charts if you want to. It's definitely been respected. So here, we've been talking about we're kind of probably going to be looking at consolidation at the very least, and that's what it's getting. And the way I do this out, I believe in my last video was maybe we see a cooldown and maybe a bounce, but yeah, we'll have to see if we can get above these. You can definitely see there's some resistance coming in near 160, 157 actually. So I think if we can start pushing into like 158, that would be a good indication that we're going to fill that gap at the very least. So for now, it's just kind of drifting in this range, not too much to say. You got a gap down here, and you got that gap up here. So it's kind of a question of what gap does you want to fill first. Tesla, we were bullish all the way down here at 101 to 94. It's gotten the run that we were looking for, and the thing is when I'm doing this kind of like analysis, I don't mainly look at percentage run in terms of percentage run at the moves that I'm looking for. So this is a disgusting run, like 100%. But in comparison to this whole move, like just don't even look at the price. It's just retracing this drop here. It's how the market works. Nothing goes down forever, nothing goes up forever. This is just a retrace or the start of a move up. It's gonna retrace down before higher, whatever it wants to do. It's in comparison, it's not that crazy. I mean, you had an insane drop, like 70% in a few months, and it's only halfway up. You can see that. It's only retraced to the 50% right here. So this is not that crazy when you're thinking in comparison of the previous price action. This is just, the waves are massive because the moves are absolutely gigantic right now. So forget about, the percentage, terms of percentage run, but just look at the overall structure. Where are, good areas that it would likely get rejected at. Keep going. We're talking about how if it's going to get above that 155 level, or 150 level, it's a straight shot to 180, and then it's going to get hit by a lot of selling pressure up here because of this volume node where there's a lot of supply. This used to be a major support. It's now going to be a disgusting resistance. You cannot just walk back up into this range. There's so much resistance here because this was a support that was intact since February 2 years ago. So 2 years ago. So this is a support that used to be support 2 years ago, and it's testing it for the first time. It's not going to get through it on the first try. That's not how it works. That's just not how it works. So, in summary, really, this whole area, I would be astonished if it manages to get up over 230 on the first try. It has to get above this resistance, and then this region. So you can see it got rejected. Not that big of a rejection, but 12%, that's 12%, that's not too bad. But, I'm looking for a retrace back down to 150 pretty much. If you get back under 180, I think you're going to 150. So Tesla, I'm pretty bearish in this region just because it's been a moonshot all the way up into this massive supply zone, a lot of resistance. So I'm not necessarily bullish anymore. I was bullish down here. It's moved enough for me to kind of just sit back and let it do what it wants from here. So Amazon, we're looking for probably some more downside. I said we were looking for this gap to get filled. It actually went even higher than I was kind of looking for, at least at like that time frame, because that was quite the move, and it reversed right back down, and we said that this is probably going to do something like this, consolidate. There's a bunch of gaps lower, I believe on the lower time frames. Yeah, gaps. So there's gaps all over the place. And I said it's probably going to consolidate or drift downwards for a little bit, and that's what's happening right now. So we'll see if it can really hold the support. There's a lot of demand here, so you're probably going to find some buyers coming in at these levels from I would say a little under 98 to just this volume node. You can see that. So put that on your chart. I started it from around August in 2018, just because that's really where this consolidation and a lot of price action is taking place. So we'll see how it does around here. This is the area it really needs to hold for support. You can also see this right here. That's a pretty big version of congestion. So bulls are trying to fight here. We'll see if they can do that. A break back above 103 would probably be looking good for the bulls again. So biotech, we've been looking for this trend line break to the downside. Now this was kind of interesting. I actually wasn't paying attention to the divergences, so this is kind of something technically new I'm pointing out. I might have pointed it out in one of my earlier videos, but I did forget about it. We had these divergences, so this was a really good indication that this move wasn't going to last. So it was a pretty interesting move. You know, it's not exactly ordinary for something to kind of like break out of a range, and it looked sustainable. You know, we consolidated into the top of this range and then broke out and reversed back down instantly. So that was a little bit of a surprise, but now looking in hindsight, there were massive divergences, so that does make sense. So this is just kind of something where I definitely knew about this divergence before, but I forgot about it and just hadn't looked at it. So this is kind of a scenario where we can look back in hindsight and see what we missed and just kind of how we knew this would happen. So that's just how it turned out. Those divergences played out. They were big, and yeah, that's what we're getting. So now we're just going to kind of see where this holds support. This is a pretty big region for it to hold. There's a lot of congestion in this region, so you can see bulls are kind of trying to hold it up here, but the big support to hold is going to be 660 on LabVIEW, and if it holds that, it could get a nice bounce right back up to the top of the range. That range that's been intact for quite a long time, since September of last year, so it would be cool to see this going range bound again, so we could continue trading it. So on to semiconductors. So we were looking for that top at it was like I think 428 to 438 or something like that, and we were looking for immediate downside, and that's what we got. And the way, if you want to figure out how I found that range, was I took my fib extension, and this is a little kind of wonky, I guess, but I'm thinking of this as a kind of a complex wave structure here, and I'm not drawing it perfectly, but you get the idea that it rejected at that 100% extension here. So in that case, this wave is equal to this wave right here, A, B, C, and that's just a wave structure that the market follows. This is a corrective structure. So this is really where the market is at a massive pivotal area. So if semis break back underneath this range, it should go to a new low. New low, and that's a lot of downside. Like, we're talking NVIDIA going to just a lot lower. So same thing with AMD. I think just taking a quick glance at AMD, what that level was that I was looking at was, I believe it's in the 20s. Yeah, so 20s, like this region down here. So there's some serious downside on semiconductors if this region doesn't hold. So keep an eye on SOXX, because if it doesn't hold this region, there is a lot of money to be made from semiconductors. The semiconductor ETFs like SOXS. This is the leverage short ETF. So when this moves 1%, this moves 3%. So a lot of money you can make with these ETFs, these leveraged ETFs. So keep an eye on this thing. That there's some serious money to be made if this region doesn't hold. Now, if it does hold, well then this could just be a third wave where it gets a little retrace, which it's doing right now, with 3, 4, and then 5, and it goes higher. So, market is at a very, very pivotal area, and just kind of a little like hint or like trick, I guess, is wave 4 is always a pivot, because if it goes, it's just, I don't want to go too in depth with this, but when you break the region of a wave 4, that's kind of a pivot for a new structure. So you can see it's having trouble here. We're going to see if that continues to be the case or not. CPI should give us, I think it's going to give us a pretty good picture for what the market holds for us in the future. So the VIX, we've been looking at kind of this breakout structure here, falling wedge, and it broke out here. We filled that gap we were looking to get filled, overshot it, which I wasn't exactly expecting, but then looking in hindsight, you had this trend line, just kind of a trap, but still held support. So, you gotta watch out for these tricks. They're everywhere. But now it's just, are we gonna see this? I think this is probably the trend line to be watching here. Just that top of the falling wedge, if it's gonna hold that or not. So, VIX, we've been talking about, we're looking for that bottoming process to happen on the VIX in, I think I said late January, and it took a little longer than expected, but this could be when the VIX is bottoming, and you could see another major run. So, again, CPI, the aftermath of the CPI move is going to be quite the moneymaker. So, on the SPY here, I have quite a few things to say. So, the first thing I want to do is kind of, for those, just kind of wanting to learn about the market, I'm going to show you what we did in the Discord on Thursday. So, just the waves were really clear, so they were really fun to play, just easy to trade actually. And I was very bearish. I listed all my bearish reasons. We had fallen wedge, volume wasn't supporting it, possible exhaustion gap. That's when you get a gap up or a gap down at the end of major moves, and that just kind of signals, or that just can be an exhaustion gap, where it's kind of that last push from the bulls and bears. Didn't hold that golden pocket. So this was a big thing right here. This was something I mentioned. So if we break below this range right here, I'd start to point towards 400. So that was this blue range. So now we're going to zoom in much closer and just kind of right here. So that was the 0.618. So I'm going to draw this out. And you don't have to look at this. This is more for just people that are curious and kind of learning how all works, and LA Wave and everything. So you can get past this if you want, but this was the region that really needed to hold, and it was very important that it would hold, because if it didn't, odds increased that this isn't a impulsive structure. So if it held this area, we would have likely seen something like this hold support and then continues higher, but that didn't happen, and instead it went lower, and that's what we were looking for. If we break below that range, I'd start pointing towards 400. So really interesting here, because it didn't go as low as I was kind of thinking it could go, but it also just kind of completed that symmetry that we're always looking for in the market. So it hit that 100% extension. So wave C is equal to wave A. So this could be all it needs for corrective structure before its last final push higher towards our 4,300 target that we've been looking at on the ES. So on SPY, that equates to I think 428 or something like that. But if it doesn't hold, we could see some kind of a complex downward structure. So I have no bias. I'm not betting on it. That's just not what I do. It's a lot easier. It's a lot less stressful to just play the aftermath. You don't need to try and guess and bet on what CPI number is going to be. like what Jerome Powell's going to say, how the market's going to react to it. You don't have to do that. You can just play the aftermath. Powell causes a massive move to the upside. Nothing goes up forever. You can wait till you see signs of exhaustion and short it and just catch that pullback. And that's what we've been doing with these wave structures. So the wave structures in here, it was really hard to figure out the macro picture of these wave structures, but we were really able to see kind of the waves inside of this. So it was a lot more of a scalping week, to be honest, rather than kind of trying to position yourself for a bigger move, because as we get into the final wave here, let me clear this up quick. Actually, before I do that, I want to point out something. So we retraced, so this is this big volume pocket we've been watching for quite a while here. This region right here. So you can see we pulled back on Thursday or Friday, I forget what day it was, right down to here. So this was a prior resistance in the past. It's been a prior support inside of this range. So put this on your charts. You'll see the relevance of this, but that's kind of where we found support at when it was kind of confusing, like what was holding it up. There were some trend lines, but I really do think this was the main thing. There are some buyers, some bulls willing to step in here. That's what happened. They held it up, and now we're just kind of back inside of this entire volume gap. So interesting spot here, to say the least. But yeah, it's pretty interesting. We dipped back into the volume gap, held this volume node though, and returned back above the volume gap. So technically, we're above the volume gap. I would say we're kind of in bullish territory. There's a lot of conflicting factors. Sort of, I want to be bullish and look for 430, but people are kind of like getting bullish, so I don't want to be on the same side as the majority of retail, because everyone was bearish down here, and I was looking for 420, or specifically 4200 on ES. That's what got hit, and now everyone's like looking for all-time highs, when that's what I was looking for down here, looking at those possibilities. So now it's just like, I don't want to be a part of the hurt, so I'm kind of questioning if we can make that final push, but I would not be surprised if we do. So CPI should give us a better picture. The supports that we do need to hold, or the important ones at least, are going to be these previous lows. So, nothing like really groundbreaking that I'm saying for the downside, and nothing new that I'm saying to the upside, because I've been looking for 420 to 430 on SPY for a really long time, to be honest. Since I think all the way since back here, I was looking for a little more upside, then a retrace, then back up for that major ABC structure before new lows. Now, I also have questions about the new lows, but we're just kind of going one step at a time. So, if this is the case, you can see all the way up to 440. I've been saying that for a very long time, so that wouldn't surprise me at all if that happens. CPI, if it's some kind of like earth-shattering number, comes in a lot lower, you could see some this is what happens on CPI. So that was insane. I had a friend make I think it was $210,000 off of $10,000 in like a couple hours. So CPI can make some serious moves. So don't be surprised if we just rocket to the skies from here. But I don't necessarily want to say that's going to be the case. That's why I'm playing the aftermath. So other than that, there's really not too much to say. Tomorrow's going to be a good day to just see what the market wants to do, kind of let the market react to it, and play the aftermath. So if it drops down, so this is the two scenarios I'm looking for are a final push and then a massive drop. So if we go up, I'm probably not going to chase it. I'm going to be waiting to short. And if we go down, I would be looking to see if we hold support and then see if we make that move up to 430. So the most unfavorable scenario that in my mind would be if we go down and we don't hold support, because then it's a question of, do I want to chase? And I'm not a fan of chasing moves. I like to get in before those moves happen, just because I have a much bigger buffer of risk tolerance where I can afford to lose a lot of my profits, things like that. So I don't like chasing moves. even if it really hasn't even started that much of the expected move that I'm looking for. So um, if we're looking for this move lower, so in that case, I would think, uh, the big support to be watching would be that previous low, but I think most importantly is going to be, give me a sec, it's going to be this golden pocket down here. So um, it's going to be really important that it holds 399 to 398 region. It can wick below. It can do something like this, trap out a lot of people, shoot back up, and it, under that, it's not looking good. That's what we talked about in the Discord. Once it gets below that range, odds start pointing uh, towards 400, and it started pushing below that. Need to hold it, or it's looking really bad. So you gotta use it in confluence with a lot of other factors and variables. But the point is if we move down here and we're starting to hold this, and then we see some sort of like bullish structure moving back up, then we could be looking towards that 430, and this would just be a bigger corrective structure towards that 400 level to test the big support, that big psychological 400. So rips up from here, I would be looking for downside, or there's three scenarios. We rip up and then down, we drop 400 support then bounce, or it's just death, I guess, and that's not what I would want to see. So whatever the aftermath is, that's what I'm going to be playing, and that's what I'm going to leave this video. So if you watched the whole thing through, make sure to show it some love, give a like and subscribe, and peace out, guys.